Always a pleasure, Charles.
Same here, man. Liz Claman, over to you.
You know, technology is supposed to make our lives better. I got 2 laptops. I've got a phone. It's a mess.
Well,
Charles, thank you very much. Breaking news, stocks. Okay, they have climbed out of the darkest part of the hole, but there's still kind of a long way to go before they'll hoist their way entirely out. Wall Street is still gripped by anxiety as we kick off the final hour of trade. You know, we should show you the VIX right now because Wall Street's fear index is down, it's up rather, showing fear up 10.75%. It hit a peak of around 20.7 after 1 p.m. Eastern. Right now we're at 19.55. So we've got frayed nerves and they are broad-based. Mega caps to small caps are getting squished. Let's actually start there. The Russell small and mid caps enduring the worst of it. Right now, they are down 1.6%. They were down more than 2%. So it's a loss of about 43 points. The Dow came into the session just 66 points away from another record. But that went out the window an hour into the session. It has swung 1,025 points from peak to trough. Right now, it's down 365. Worst point of the session, it was down 699 points. It is below 50,000 at the moment. S&P is losing 68 points, and the NASDAQ is down 362 points. Cisco is the biggest drag here. The artificial intelligence hardware maker reported a fiscal second quarter beat on both the top and bottom line, but forecast profit margin pressure rising amid the price for memory chips that is getting hotter and hotter. Cisco is getting punished right now, down 12%, even though its networking segment sailed above Wall Street estimates. Investors instead are focusing on the high cost of memory chips amid the AI data center boom, which could squeeze margins and hence profitability. The memory chip price issue stemming from a shortage we've been telling you about due to AI demand is triggering a domino effect. Chinese PC giant Lenovo warned earlier today about the shortage. Subsequently, that body slammed U.S. PC makers. Dell and HP Inc. are in the red. We've got Dell down 8 2/3%, HP Inc. down 5.5%. HP earlier looking at a 5.5-year low. This sell-off, though, we should tell you, goes way beyond tech. Get the fainting couch ready. The Dow Transport Index, which includes trucking, logistics, rail, and airline stocks, is face planting, down 4%. Earlier, it was down 5%. What makes the outsized drop weirder is that right out of the gate, railroad stocks, Union Pacific, Norfolk Southern, and CSX all had chugged to record highs, but then they all went into the red. Union Pacific is flat now, slightly in the green, but Norfolk Southern is still down 0.5%, and you've got CSX down 0.5%. They all had really kind of gone from their record highs to the red the same time the broader market began falling. So too did the choo-choos. Norfolk Southern and Union Pacific, you know, Norfolk Southern popped as high as $319 a share. That one is not doing well, but Union Pacific, you can see how deep it went. Now it's trying, like the rest of the broader market, to sort of scratch its way out of the darkness. Let's find out what is going on here, because it is far from just the transports, tech, and what we've already told you about. Joining me now, Allianz Chief Economic Advisor and former PIMCO CEO, Mohamed El-Erian. Mohamed, I'll just start with that. What is going on? Because let me point out the financials, and you pair that with the VIX, the volatility index, which is off the highs of the session. But if you look at the two-day picture of the VIX, it started to spike today, and yet financials have been ugly all week.
So this is the volatility that results from the lack of a dominant narrative.
I thought AI was the dominant narrative.
Last year, AI was the dominant narrative. And it took us to really nice places. This year, the counter AI was the counter narrative, was the narrative. Don't worry about AI. Look at the non-AI, because AI is going to disrupt everything. And now we're realizing that that's not a strong narrative. So when we lack this narrative, we should expect a lot more volatility. But Liz, this is where a lot of opportunities happen, because in a market today, everything goes down.
I mean, look at the regional banks here, Mohamed, down 5.25% for the KBWB, and you see the KRE is following right down into crimson territory. And you can't really have a big rally without the financials. But all week long, Morgan Stanley, Citibank, Wells Fargo, they've been clocked. JP Morgan hasn't done so well either, down more than, I think earlier, was down 6% for the week.
And they had been taken to very high levels. Why? Because people were rotating out of AI into something else where valuations looked more attractive. But if you don't have fundamentals supporting that, this is what's going to happen. I'm not too worried, to tell you the truth. I think this year is going to be one of volatility. There's going to be opportunities for investors, many opportunities for investors, but we have to understand we are in a period of market volatility.
Earnings look good. Forget the fact that we got a very robust jobs number for the month of January. It was nearly double what was expected, but more than 350 S&P companies have reported earnings. 76% have beaten on profit, 72% beaten on revenue. So far this year, and this may surprise our listeners, earnings are up 13+% year over year. Why is the market not reading this? And people who aren't, are they making a mistake?
So there are three factors that determine markets, as you know, fundamentals. And if you look at fundamentals, we have strong growth, 4%, strong earning, and we have nominal GDP of about 7%. That's great for companies. So fundamentals are fine. The second issue is valuations. And we got to pretty lofty valuations. That is what's being corrected. And the third is just technicals. You know, this market tends to overshoot on the way up and overshoots on the way down.
Well, it overshot early this morning. Well, maybe it didn't, I don't know. But with the Dow falling at one point down about 700 points, would you have jumped in there and bought some of the weaker names?
So I think all of us have to have a list of names that we're comfortable with. And when we see them trading down,
like Disney's down 5%. Cisco, as you say, you know, as we talked about, down 12%. Apple is a real struggle here, down 4.8%.
Right, and I think the names I'm thinking of are very strong balance sheet, very strong. So think of a Google for me. Okay, that is the sort of name that is attractive here. But we didn't even go to where there are massive. I mean, we didn't go to silver, down 10, 11% today. We've seen the most speculative part get hit really hard. So this is a general deleveraging, and I think it's actually going to put us in a better place, Liz.
Silver, gold in the red, oil is in the red. You've got West Texas Intermediate down 2.6%.
Yeah, it's everything.
So when you say rotating into something that is better, where is that?
So it is building portfolios from the bottom up. For a long time, we wanted to build them from the top down. We fell in love with the AI theme.
Is that over? You're not saying it's over?
Absolutely not. I think AI is very powerful, but we are in phase 2 and 3 of AI. So what are people talking about AI today? Is no longer those working on AI, is those working with AI. And then you start worrying about, will AI disrupt this sector? What about that sector? I think this is actually healthy. We're getting smarter about this very important transformation that's facing us.
Okay, I did continue. I want to push you on where. Where would be the areas that haven't been totally drenched in high valuations and that aren't picked over?
So they are things like emerging markets, private credit, massive opportunities there, where we see the opportunities that we saw 15 years ago. Some people are diversifying into other markets. I basically have a very barbelled approach. I have very high conviction yielding assets here, and I have more opportunistic yielding assets here. And I rely less on the indices than I have in the past.
How closely are you watching the Supreme Court decision that we're waiting on regarding tariffs? The New York Fed Bank came out today with a study that said 90+% of the tariffs are being paid by Americans, by U.S. importers, U.S. companies, and U.S. Americans. The president keeps saying that it is the exporters from foreign countries who are paying this. No, it's not how tariffs work, is what the New York Fed is saying. What kind of upheaval or earthquake could it cause if the Supreme Court kind of agrees that President Trump did not follow the right reasoning for imposing these tariffs, which he said were a national security issue?
So two things. My own sense is the biggest burden of the tariffs is by the U.S. importing companies. Now think about it. Your costs have gone up as a company. And are you going to pass on that higher cost to your consumers when you're not sure whether the tariffs are going to be in place or not? Most companies have held back, waiting to see what the Supreme Court is going to decide. So the major burden right now is not the consumer, it is the U.S. importing companies that are carrying the burden. As to what happens, I hear two things, Liz, and I don't know. I hear one view that even if the Supreme Court were to rule those tariffs illegal, the administration has another way to impose them.
You and I talked before President Trump had announced his pick for chief of the Federal Reserve. Kevin Warsh is now the pick. You respect him. You like him. Do you think he will cut interest rates when he takes over? I think his first meeting where he could would be June.
And the market is looking at cuts soon after he comes in. First of all, let me tell you, I think it's a great pick. And you heard me say from the very beginning
you did.
That among the five, this is the person I would pick because of his expertise, his experience, because of his communication skills. I think what people are not focusing on that's really important is there's three elements to him. One is the rate cuts. Everybody's focused on that. The other one is the balance sheet. And the third one are the reforms that he has already talked about in Washington last April that will make monetary policy more effective. And I'm pretty confident that he's going to be able to pursue these reforms and gain the confidence of the FOMC, which will make monetary policy more effective going forward.
Well, Mohamed, you're here on quite an interesting day. It's hard to say where the markets will end up today, whether they'll be lower than where they are now, which is down about, at least for the Dow, 397 points. But we're well off that 700-point stomach-churning drop. We'll continue to watch every second of it tick by tick. Thank you very much.
Thanks for having me.
Good to see you. All right, go ahead. Make fun of guys who wear Crocs with socks, but no one is dissing investors who bought Crocs stock in the last month. We are going to tell you why the maker of the popular foam clogs with Swiss cheese holes is rallying big time on this down day. And President Trump rolling back sweeping climate change regulations that he says could save Americans more than $1 trillion. We'll have the details in a live report when the Claman Countdown comes right back. Stay with us.